All right, so before I get too far into order flow and what order flow actually is and is not, and I commit you guys to an answer to that question, I'm going to probably shoot a few holes in what you think is order flow and your understanding of order flow. All right. Now we've got a few people. Everybody always logs in here late, so we're going to just talk for a couple of minutes while people are getting situated and they start logging in. I want to make sure that you guys understand. Generally, I cover the chat and I don't I want to get through the presentation and not get distracted a lot by the chat. But this particular event, I'm going to actually ask you guys to contribute. I'm going to ask you a few questions along the way about your understanding of things. And please feel free to answer me honestly and openly. I'm not trying to corner anybody or embarrass anybody, but I'm simply wanting to make a point sometimes. And so I'm going to be asking you guys to help me and contribute to the conversation, okay? We got a whole bunch of people logging in all at once here. And so we want to make sure we get that, give them a couple of minutes to get situated here. So if you don't mind, indulge us a little bit. We've had 10 people logged in the last 10 seconds. So we're going to keep letting people log in. Everybody tends to log in at the last minute. Order flow is one of those buzzwords that we all tend to learn about when we're studying trading, when we're looking on YouTube and we're looking at interesting information and the videos that have been watched the most. Maybe we're reading trading forums and we're learning about and hearing a lot about order flow. Where did you guys, besides getting this email, if you've had any experience with order flow or order flow analysis, where did you guys hear about it? How did you come to learn about or at least hear about order flow for the first time? Yep, that's a very common way, Bob. Okay. Who's MSN? I'm sorry. Maybe I don't know who that is. Maybe I should. Oh, God. Okay. Yep, that's you're paying attention. That's really good because the algos have a lot to do with order flow. So before we go on, and we're going to go ahead and get started now. And again, many of you are used to my webinars. I've been doing this for nearly 10 years now. And I almost always cover up the chat because I tend to easily get distracted by people asking questions or making comments and whatnot. And but today I'm leaving the chat wide open, and I'm going to probably ignore a lot of your questions or comments, um, but there may be a few that I'll want to get to. Not saying that I'll ignore them completely. Sorry, I'll ignore them until the proper time to ask particular questions. Okay, so save that to the end, all right? If you have questions, particularly questions not related to what I'm talking about, until the end, okay? All right, so let's move on. I gotta do this little thing here first. NinjaTrader, which we're a partner with, has a new process and performed a bunch of background checks on us and a lot of their other ecosystem partners. This is a new thing that they require of us, and you know I should be doing it anyway just to cover my butt, but they require it of us to make sure that people understand all of the risks and the performance reports and stuff, which I'm actually not going to talk about here, but they require that we put this in order to be a NinjaTrader ecosystem partner, which is no small feat these days. They don't just sign you up. You actually have to pass a very rigorous um, uh, inspection and qualifying process to be one of their partners now. So you can feel confident that when you're doing business with a NinjaTrader partner, these guys have checked out me and everybody else. We've been thoroughly vetted. Okay. So just so you know that. All right. For the very few of you who don't know who I am, I used to own a construction business. I and some hot tub stores, and I just that's a lot of hard work. Both of those, I chose two very labor-intensive businesses, and then I got introduced to day trading, and I thought that was going to be a much easier way to make a living because I'm pretty smart, and I could figure this stuff out really quick. And yeah, I know 95% of traders that tried trading fail, but not me, because I'm much smarter than almost everybody. So I was going to pick it up in just a couple of months. Well, I struggled for like 7 years before I figured something out. Okay, I started turning things around, and that's for another time. Okay, since then I designed some the trading system that we use in our trade room every day. And in order to trade that system, I had to create some indicators. Okay, today this conversation is leading up to the development of our most important indicator, okay, so that we can trade. Okay, so I'm going to ask you a question. How many of you know about order flow analysis? Okay, it's a regular buzzword that we hear a lot about. Maybe you've used it, maybe you've looked into it, maybe you've tried it. How many really know and understand order flow analysis? Okay. Please tell me, because this can be done in just a couple of sentences, what is order flow? Or at least tell me what is your understanding of order flow? It's actually kind of a strange term. First you're going to have to, okay, you're going to say numbers of buyers and sellers. I want you to hold on to that. I want everybody to hold on to that, because that's a very interesting explanation. And that's what most of us come to think of order flow as. Orders that have been placed to buy or sell a stock. Okay. Orders that have been buy or placed. Buy. Okay. Right. Okay. Starts with what you see on the time and sales, but the charts use derivatives of that. Okay. Aggressive market orders hitting resting orders. Okay, Thomas, who are you and where'd you come from? You're the one that got your answer is the closest to being right. Okay. So we're talking about the flow of orders, but let's simplify this. Let's simplify this. Okay. For those of you, Many of you are very close and you're kind of on the right track, but it's easy to get off track. Let's simplify this. What's an order? Tell me what an order is. Come on, Bob, you know better than this. You know better than that. It's not a trade inside business. You know it's not a trade. An order is not a trade. Whoops, sorry. An instruction. An instruction to place a purchase or sale. It is not a purchase of a contract. It is an instruction that you are willing to buy or sell at a certain price. So it's not buyers and sellers, it's not contracts, it's not volume. An order is an offer to buy or sell something. That's the single sentence that I was looking for. Anybody here been to an auction, a real auction? Like go and sit in the audience with a little thing. It's one of my favorite things to do. I went to an auction last week. It's one of my favorite things to do. I love going to auctions. My wife and I both together have ended up with storage buildings full of stuff that we bought at auctions because we love getting something for a deal. Okay. Anybody know what a shill is? When you go to an auction, you know what a shill is? Then I want to go to auctions with you guys. A shill is a person that has been placed in the audience to place fake bids on items. And they do this when they know there are people in the audience that will pay more than the current price for whatever the current bid for that item is. It's very oftentimes the auctioneer places this person in the audience to do this, or several people. Typically it's several people, because if it's the same person over and over, the audience catches on and realizes there's a shill in the audience. Okay? And that's bad. So you got to do this quietly. You got to kind of fake it a little bit. This is what's happening in the markets. This is order flow. So the shill is a person that sits in the audience and holds their paddle up, knowing full well they will never buy that item at that price. Okay? They will either get outbid, which is what they want, price now goes higher, or they will remove their order. Okay? Everybody knows and understands. You all know and understand that today's markets is an auction, right? You have something to buy or you have something to sell. You say, I'm going to sell this at this price. Then there are people that go, okay, I'll buy it at that price. Right? Everybody understands that the markets are an auction. So why wouldn't there be shills in today's markets? A shill places an order. Okay? So order flow trading, as we trade, is anticipating the prices where other traders have pending orders set, particularly important market participants with very large orders. Okay? An order is not a trade. This is where we all get off track. Yeah, there have. It happened in 2010. You know how many people have been prosecuted for that, Bob? In 2010, there was a spoofing law. Nope, to be honest, there's been one. There's been one guy, a singular guy, because they were trying to load up charges against him, and they went, oh wait, we got this charge we can put against him too. One guy since 2010 has been prosecuted for spoofing. Okay, so how afraid do you think the market is of spoofing? Or that's what it's called. So that's what the regulations are. So how afraid do you think the market makers are to get a slap on the wrist for spoofing? Yeah, not too afraid. So let's do this. All right, it's very important to understand this statement that's up the screen. This little piece of information escaped me for so many years, but it's so important. It distinguished between process trades and orders. Between process trades and orders. This is what you need to understand. There is a huge difference. Okay, so let's say you go to eBay and you're in an auction and you're ready to pay for an item, okay, and the price that you agreed to, all right, at the price that you agreed to. But is that a sale? Okay, you've agreed to a price. Is that a sale? Has that transaction actually taken place? Yeah, yeah. There is no transaction. You've only got an agreement. There's no transaction. Not until the transaction takes place is there a sale. What if you say, okay, well, I agree to buy this item, and you get an email that says, sorry, but we can't fulfill your order because we're out of stock. You've not purchased anything, right? So you got decision making. You can allow the order to come in and wait, just wait and be fulfilled in the future. Or you can look at the same item from someone else that maybe is charging a little bit more, and you go, okay, they don't have the item. I'm going to go get it from somebody else. It costs a little bit more, but I'm going to pay it. It's worth it to me. This is what's happening in the markets every day. This is what we're trading. Everybody clear on this? Do I have any questions yet? Have I lost anybody? So I want you to notice, all right, so we've got a trading dome on the top right, and we've got a level 2 over here on the left. Okay, I don't know if many of you have looked at the level 2. This is also called book data. Okay, so you'll notice the orders in the dome here will match the book data here for these buyers and sellers here and here. Okay, so this is the book. This is what you're seeing on your dome. These are the orders that you're seeing on the dome. This is the order book. All right, so think of it as you're at a big table with the buyers on the table and the sellers on the other side. And you're sitting at this table and you're going, I'm a buyer and I'm willing to buy 25 widgets at the best price available, not a specific price. So whoever has the lowest price out there, that's the one that you want to buy. That's who you're buying from. But he's only got 10. Or he's got 15. And he's going to leave. And so then you're like, well, no, I want 25. You only can sell me at the lowest price, 10. I took all of yours. Now there's no more at this lowest price. So I'm going to look at the next highest price. Do I still think that's a good deal? So you go and you go, okay, it's still a good deal. I want to buy those next 10 at the next higher price. All right, everybody understands this is what we're doing every day when we trade. So you find somebody willing to pay to sell it at the next higher price. This is what moves price higher when we're trading. You ever wonder what makes price move up and down? It's when the price when the buyers and sellers are exhausted at a particular price. And there are either sellers, more sellers that are willing to buy, or more buyers that are willing to buy, or no more sellers that are willing to say, you get it. Anyway, this is what moves price up and down. Is this an epiphany to anybody? Does everybody, as they all understand this? You need to understand this to understand my next point. Okay. For those of you that are just waiting for me to get on with this and to show you how to take winning trades in the next few minutes, this is probably not the right presentation for you. Okay. If you're just here saying, show me how to trade, this isn't that kind of presentation. I'm trying to help you understand something. If you want to come to the presentation where I'm going to teach you how to use this information to trade, that's this Saturday. Okay. This Saturday, 11 a.m. Eastern time. You can register for this. Connor can put the registration page back up there. If you, obviously you all registers you for Saturday, but I'm not sure. So make sure. I'm gonna, right now I'm kind of starting to punch a few holes into order flow, and I'm going to continue to punch some holes into it so that you understand that that your understanding of order flow may not be what it actually is. I'm going to punch a few holes in volume too, okay? So that you have a better and clearer understanding on volume and how to trade volume. And then I'm going to show you how we pull it all together to successfully trade the second brain trading. Okay. So I'm going to bet that most of you have no idea what makes price move, or didn't until now, or maybe at least 70% of you. You just know it did, because we don't take the time to think about it. We just know it does. But why it does is very important in making a decision on how and why you place trades. Okay. Now, there is one thing that makes price move, one type of order. Can anybody tell me what type of order is the only order that makes price move? Anybody? There's lots of type orders. Anybody else? Anybody else? Anybody else? Anybody else? You guys nailed it. Nice job. Last time I did this, I got every answer you can imagine. So I got a smart group. Market orders are the only orders that make markets move. And why is that? Can anybody tell me why? Yeah, you're right, Rose. You're absolutely right. How long does it take to process a market order? If you put on a market order, how long does it take to get filled? If your stop gets hit, which is a market order, how long does it take? Exactly. It's immediate. Exactly. Market orders are the only thing that moves the market. Limit orders are simply offers to buy or sell at a price that is not the current price. So how many market orders are being or have been processed, and how price reacts to that flow of orders being processed is all about order flow, okay? So if all orders were limit orders, price would never move. Therefore, nothing happens without market orders, i.e., the flow of orders into the market or order flow. Got it? Everybody clear on this? Any questions about order flow? Order flow, not sales flow, not processed orders. Order flow. Have I lost anybody yet? You guys are killing it. I got a smart group tonight. So you can see, everybody got this, uh-huh. I got a few of you that are answering, and then I've got a whole bunch of people that are sitting quietly, kind of shaking their head going, yeah, I, uh-huh, sure. You've always been told how important it is, right? Order flow analysis, but never really shown how to use it profitably and consistently. It sounds good, but I often get the feeling that when I'm talking that people are kind of going, oh, yeah, I get it. Yeah, I get it. And a lot of people nodding out there. We watch these new YouTube videos and we watch order flow webinars. I've watched a bunch of them. We watched the order. Wow, you're old, Joe. If you know who Blondie is, you're really old. I bet you almost nobody here knows who Blondie is. How about this? Anybody know now? Anybody know who Blondie is now? No. Clint Eastwood in those spaghetti westerns. Yeah. The Lee Van Cleef. No, the other guy. Oh crap. I can't remember his name. Called him Blondie. Called Clint Eastwood Blondie. That's funny. I forgot that. It's one of my favorite. The spaghetti westerns were my favorite. All right. So you guys have been hearing about order flow. You've been watching it in webinars. I watch it in webinars. I used to. And I listen to it, watch, and I'm like, oh my God, this looks so interesting. This is so important. This is really good stuff. Now what do I do with it? I've got these charts for order flow. These are order flow charts. Okay? You go online and you watch YouTube videos, you're going to see this stuff. You get these charts, very complex charts, lots of information on them. And we love information as traders, right? We're all about information. The more, the better, right? Why? Why do we think the more information we have, the better? Because it's going to make us a better trader. Information is knowledge. No, we think that it's knowledge. Okay, take a look at these charts. On these charts, you're supposed to compare the numbers left and right and see if you can find imbalances between buy orders and sell orders or supply and demand. Oh, that's another big fancy term, right? That we think we know what it means. Supply and demand. We'll talk about that in a minute. These orders on these bars are book orders. What does that mean? Book orders mean they may or may not be executed. So when you see the order or the flow or the order flow chart, this is called a footprint chart. That's what this kind of chart is. Remember that these are orders only. But boy, that's a lot of information to trade with. So what are you supposed to do with all this information? Ideally, you'll identify potential areas of support and resistance. You're also going to be looking for imbalances between supply and demand. This is the whole premise behind order flow. So the order flow community says that once I've studied this chart and all the numbers on each bar, I can clearly and succinctly identify the supply and demand imbalances and support and resistance levels, confident that I have a strong chance of price moving in my favor. And it's time to hit the button. Excuse me. And place that trade with confidence that I analyzed that data correctly. But remember, this is all based on order flow that may or may not have been traded. Wait, what do you mean not traded? It's fascinating, right? It may or may not have been, it may have been, I don't know. These are orders that may or may not have been trading. If you don't understand what's really going on, you might find some videos or webinars. It's really easy to get sucked into these really good videos on YouTube or webinars and go, whoa, this guy knows this stuff. This guy's awesome. This is such good information. But anybody pick up what's really wrong with this? Anybody, other than the obvious, anybody pick up what's wrong? What the issue is here? Yeah, it's extremely confusing. That's the obvious. Orders. Order flow analysis. We tend to think of trades as orders, don't we? All of the information we're using to place a trade, the orders that are constantly changing and updating, may or may not. I've been trying to lead you guys down to this conclusion. The orders might turn into a trade, and then again, they might not. I want you guys to watch something here. So exactly. But Stuart, there's an entire trading strategy and multiple trading strategies on order flow. Order flow is a huge buzzword in trading now. How do you get into trading without hearing about order flow really soon? So I need you to pay really close attention to the screen. Everybody, I know you're watching YouTube videos or whatever, and you're kind of tuning me out, but stop now and then look at the screen for real quick. Just a couple seconds. Say something important. I'm gonna play this, and I want you to tell me what you see. Okay, what'd you see? Anybody? Oh, sorry. What'd you see? Anybody? No change. You saw nothing. Imagine that. You saw the yellow bar move. Okay. It did. I'm not going to show it again. Anybody? You were all paying attention, right? You all paid attention, and you missed it. Let me help you here. So here was the beginning. Here we are, and I'm going to actually tell you where to look. All right. So take a look at that column right there. Now you saw more than that. You missed it. Which is their intention, okay? I want you to understand their intentions are that you're going to miss this. Us retail traders don't get the benefit of this, okay? So I want you to look, here's where we were, all right? So I'm going to go over, and suddenly, holy crap, there's almost 1,000 more orders. This is an order flow item, right? There's almost 1,000 more orders at that same price. And a second later, Those orders are gone. So how accurate is the information that this is, by the way, this is order flow. This is where you're supposed to be looking in order flow analysis for the imbalances of supply and demand for actionable data to make trade decisions with. Okay? So you came here because I mentioned that order flow and nothing happens without it. And that's absolutely right, because market orders is order flows and nothing happens without it. But the whole concept of order flow trading and order flow analysis has been kind of bastardized to the point where it doesn't even mean what it used to mean. It is, and it's illegal, and it happens all day, every day, because the law has not ever been applied except to one guy, and that was because of a bunch of other bad stuff that he did. So why don't they apply the law? Because of money. The guys that are doing this have all the money. And we all know who makes the laws. So I got a question for you. Is it better to make decisions based on what might happen or did happen? I'm getting to that, Rose. What happened to the guy? The guy, he got majorly prosecuted on lots of things and went way down the river. I'm sorry. I coughed. I have a little bit of a cough, so I keep hitting the mic button. So that's my question. Oh, what did happen? So that's your answer, Joe. What? Anybody else? So based on decision better, what's a better way to make decisions? What might happen or what did happen? Anybody else? Anybody? Might? Might? That's funny. Did. It's funny because last time I asked this question, everybody got it right. Now, you don't base decisions on what might happen. Let me see if I can illustrate that a little bit better here. First of all, these are what might happen. Okay, these orders on the left here might happen. The orders on the right, this is time and sales, they did happen. Okay, making decisions on what did happen, much more efficient than what might happen. You know what did happen. You don't know what might happen. So you got to make decisions on what you know. Okay? It's our nature. Let's look at any natural disaster. And here, this is the best example I could come up with. It had nothing to do with trading, but we can apply a lot of real world stuff to trading. Okay? It's our nature. Let's look at a natural disaster for evidence of this fact, or what I'm calling a fact. Many years people talked about the need to do something in case the big hurricane hit New Orleans, right? But that was, for all those years, that was what might happen. Now there were 1,000 mights inside that, what might happen. So it's impossible to prepare for all of these might events. It might happen. There was no immediate response to the potential threat of a hurricane hitting New Orleans. Okay? What do you suppose happened after, when there were actual events that needed response to? Okay? Very little vagaries there. It was very specific. Now, I'm using that because we can all relate to that. Everybody knew exactly what needed to be done based on an actual event that happened. So we all understand now that order flow is intended to confuse you, right? That's the whole point of these guys jazzing these orders. And remember, it costs them nothing to intentionally confuse and misdirect us. Entire trading strategy designed around the flow of orders. An entire strategy around the flow of orders. Orders mean nothing because they may or may not be executed. Doesn't that seem nuts to you? That there's an entire strategy based on that? I mean, and a lot of them. Yeah, a lot of them. It's time to start. Here's the thing. Here's what I did when I started turning things around. I stopped listening to all these people that were telling me this is what it is and this is how it is. And I kept trying to figure out what they were saying rather than trying to figure out how the markets actually move. When I started thinking about the markets and stopped listening to what people were saying, I started having a better understanding. I stopped listening to the words and started thinking about what the words meant and what was actually happening, what was an underlying thing. When you say an order, most of you hear the same thing as a trade, but it's not. It's an order that can be removed at a whim, right? So I stopped listening to the word and I started to think about, I'm asking you to do this. Stop listening to the word. Stop listening to my words. Don't listen to everything I'm saying. What I'm asking you to do is start thinking about what you're hearing. Because it's very easy to be this guy right here and go, oh yeah, I got it. Yeah, no problem. I got it. I understand what you're saying. Yep, good to me. It's time to think on your own a bit. Stop listening to all the words. I spent the first part of this event trying to walk you guys toward being able to think this through on your own. Okay, that's my whole intention. I'm not trying to tell you how things are. The reason this took as long as it has is because I'm wanting you to think on your own and understand on your own that there's more behind what you're hearing and what you think you understand than what you're understanding. Okay, I'm going to bet that those of you that are here that have devoted time and effort and energy and money to being an order flow trader didn't really understand what it was that you were doing, or and maybe you had very little success with it. How many of you have seen success at being an order flow trader using a chart like this one here on screen, using this? How many of you have seen success using this? Awesome, Bob. That's excellent. You use it to make decisions, direct decisions, or to confirm decisions. Is it actionable data? That's the question. That's awesome. Not many people, and I know because I know you, I know the amount of work you've done. Others, many other trading uh, uh, philosophies and technology and technical indicators and things like that. Not many people have been able to. Trade flow is not order flow and vice versa. Order flow is not trade flow. We are interested in trade flow. This is what I've been leading up to all this time. You give the market manipulator control, those guys that manipulate the markets, those guys are jazzing the orders or spoofing. You give them control over you if you allow the order flow to dictate what you're doing. As soon as you stop allowing order flow to dictate, and I know you don't allow it to dictate what you're doing, Bob. You're using it as another source of information, but a lot of people are using it to dictate, all right, that are helping them make decisions. And you start paying attention to the actual flow of trades, not orders. Orders may or may not be processed, may or may not be executed, but trades, you start cutting away their ability to manipulate you. Okay, they'll keep trying. They've been trying. They'll keep doing it, and they've already got about 80% of us just by doing what they're doing. Okay. So the actual trades and the rate at which the trades are processed through the market is so much more important than the orders. The flow rate of actual trade. Now, how do we do that? I've just talked all this time just to show you this, just to show you the speed tick, so that you understand why this particular indicator is so important in trading. The speed tick measures rate or speed at which actual orders are processed. See, here's the thing. These market makers are the ones that, hold on a second. I'm sorry. Hold on 1 second. The market makers have the ability to hide their tracks so many ways. The only way they cannot, the guys manipulating the markets, the guys, the HFTs and the quants and the algos, the hedge funds, all those guys, the guys that have all the money, they can hide their tracks in a lot of different ways. They cannot hide trades, the actual trades. Okay, orders can be a smokescreen. Okay, orders can, as you just saw, can be placed and removed, and it costs them nothing. So orders are a smokescreen. Process trades cannot be a smokescreen, and in fact, those orders can be a smokescreen for the actual trades. The only way to know for sure is to watch what's been traded and at what price and how fast those trades are being placed. So you notice on this chart, you see a speedometer, right? You look down here at this histogram down here at the bottom. This is a speedometer that I created in order to understand when it is highly likely that these trades coming through are being processed much faster than us retail traders have the ability. Okay, the big boys have all of these supercomputers inside or next to the exchanges, right? So they have all kinds of advantages that we don't have, right? So we figure that the one way they cannot hide their tracks, they cannot hide from us, is by the rate at which the orders are processed. Okay. Now, we don't base our trade setups on what might happen. We only base our setups on what did happen. So maybe maybe doesn't count for me. Trades that might be traded, I have no interest in. Order flow, I have no interest in. Trade flow I've made a living off of. Okay. When the flow of process trades, not orders. There's the distinction. Trades, not orders. Exceeds the rate at which us little guys could physically trade, then we know that the market manipulators have actually executed orders that they have intended to have an effect on us. Exactly. No, they definitely don't agree. All right. So here's an indicator that we have, this speedometer put on NinjaTrader 7. Okay. We have, in fact, Bob's here today. I'm going to pat Bob on the back. Bob has been with us for years and years. Bob kind of does his own thing, but he uses all of our tools to do his own thing. Bob's been trading for a long time, very successfully. He's a really good trader. But this is our NinjaTrader 7 version of what we call our speed tick level. This is the speedometer. This is what we're reading, the level or rate of orders going through. Previous to NT8, we couldn't do anything but measure the speed, and then we had to adjust that for each individual indicator. I'm sorry, for each individual instrument. Come to NT8, Bob had a great idea, and I sat on it for a couple of years, and then finally I used his ideas to develop our NinjaTrader 8 speed tick, which is self-adapting to whatever instrument that you put it on. So there's no more tuning of the indicator for each instrument. It will auto tune. And here's, so this is what we're doing now. This is what we're using to identify when the orders are coming through at a rate when we know the market being manipulated. Okay. Because these orders are actually going through, there's no gaming going on there's no gaming the order book. It is highly likely that the market always responds when the big boys are manipulating it, because that's why they manipulate it. Now, I'm going to teach you how to capitalize on this every day on Saturday. I'm going to show you why. I've been sitting here for almost an hour now explaining all of this so that I can show you on Saturday how to make money at this at trading. Okay, we have a lot of our traders here. Oh, that's a great question. And I'm going to talk about that on Saturday. That is actually part about Saturday. That's a very interesting question. I'm going to shoot a few holes in volume that you think are important, the same way I've done with order flow. So I'm hoping what I've talked about here today has compelled you to learn more and come on Saturday, right? But just as a teaser, I'm going to show you what we're going to be talking about on Saturday. And many of you have seen this before. Some of you haven't. I'm going to show you this little video. Now, the best way for me to, if you ever go to a webinar, excuse me a second, I got this cough. Hold on. Sorry, coughing attack, and then I drink some water. It helps. So if you ever go to a webinar and the guy pulls up static trading charts, and he says, okay, well, if you look here, these particular conditions exist, and this is what I did here, and this is what the chart did. I mean, this is what price did. And you're scrolling and scrolling, and he looks at these charts and he talks about these static charts. Static charts means historical charts, charts that happened earlier. They're not moving charts. If you go to a webinar or you watch a YouTube video or whatever, and you see that, run away, run away. You cannot and will not ever be able to repeat what those guys are doing on static charts, what they say they are doing, okay? Because it's all hindsight, all right? It's all hindsight. That's why, I mean, those things angered me for many years because I was a struggling trader for many years, and I kept looking at those things, and I kept going, how come it works so good on static charts? But when I try to trade, it doesn't work, or I can't figure it out, or I'm always late, or, you know, there's so all these other reasons that I just completely failed. Yet when he explains it on a static chart, it makes perfect sense. Why? Then I finally realized, because static charts are smoke and mirrors. This is why I show what we do on recordings, on videos. And I want you to look at this. It does. It absolutely does. We also have a solution for that. So watch this video, and I got this slider here, right? So I can slide and move it forward and backwards. So I told you about speed tick, right? So the speed tick, watch the current bar. Now, this is what you would be seeing on the left if you didn't have any indicators, or our indicators. This is what you're going to see on the right if you have our indicator. Now, on the left, you don't have a whole lot of information. You might have bars with a whole bunch of numbers on the left and right, in which case you're supposed to figure out the imbalances of supply and demand. On the right here, let me go to the next one, which is probably a little easier to see. We've got several indicators on the chart right here. Notice that these bars are turning color. This is, by the way, I'm not going to talk a whole lot about this right now, because number one, we're running out of time. Number two, I'm going to talk about this on Saturday. I'm going to go over all of this on Saturday. But what I want you to see is where the speed tick shows up. The speed tick, we're measuring every tick that comes into this bar. The speed, bam. The speed tick, when we have exceeded a level of speed, or the speedometer has exceeded what is likely that retail traders can trade, we put it right on the current bar. Okay, now that little tiny arrow took me 2 years to develop, and there is so much going on inside that little tiny arrow. But the intention is to make it very easy to make that information actionable for placing a trade. Okay. So at the open of the next bar, which was right here, we have a buy order. We're going to put on a buy order, and that's called a speed tick trade. And this is what we're looking at, this little pullback right. All right. Again, Look where the speed tick showed up on the current bar. There's no repainting. This happened in real time on this bar, and this said, heads up, this is likely to be a manipulated bar, meaning that the orders being processed, orders going through the market, the actual orders, not orders, I keep saying orders, I'm sorry, the actual trades, the actual transactions exceed what is likely that us little guys could do with our little laptop sitting in our little house with our little, Comcast or Xfinity uh, uh, connection at the little rate that we can muster. Okay, although to us it seems very fast, to those that have supercomputers inside the exchanges, we're like turtles as it relates to placing orders or processing trades. Okay, so now we know, okay, the trades are being processed much faster than us little guys can. At the open of this bar, and there's another indicator here. Talk about that on Saturday when I said I'm going to punch some holes in your volume. That's going to punch holes in your volume right there. All right, and down it goes. All right. So this kind of stuff right here is what I'm going to be showing you on Saturday. I'm going to teach you how to use the best information for making trade decisions. Okay, so mark that down as 11 o'clock Saturday. Connor, do they have to? There's the registration right there. Okay, so you can. I'm not sure. Yeah, register again. Go ahead and register again for it if you haven't already. And I'm going to go over volume. We're going to talk about that at first. And then we're going to go over how to trade. All this stuff that I've just been talking about. I'm going to show you how we know when we have an edge. And it's a small edge. It doesn't happen all day long. It's not an edge that you can place a trade and then go and do whatever and come back and hope that the trade has gone in your favor. This is a right now trade. You're in the trade, you execute the trade, you manage the trade, and you're out of the trade mostly in the next minute to 2 minutes. All right. So it's a low stress trading, meaning that it's low stress because you're out of the market most of the time. All right. Those of you that are here, we've got a special. This is kind of our end of the year special. This is the last special we'll be doing this year. If you've got any questions, you've got our email down in the bottom left-hand corner. We've got the, people want to get started at different levels. For the most part, most of our traders that have seen any level of success, they've done the Einstein program. But not everybody starts there. You can start on the boost or on the scholar and kind of work your way up if you feel that's the best thing for you. It just takes longer because you don't have as many tools to use to kind of get up to speed, but some people have to do that. Oh, I didn't know about that. All right, well, Connor's got a little special for a few of you for tonight. There's a lot more information. I think a lot of you that are here have been here before. You've heard me before. I think a lot of you come to listen because you want to hear a different perspective on trading. I have a different perspective on trading because I have been where you are. I'm not a guy. I didn't go to school for finance. I wasn't hired by the hedge funds or didn't work for one of the big brokerages. I wasn't a floor trader. I was a struggling trader that worked my way through I worked my way through all of my assumptions and expectations about trading. When I came into trading, I had all these assumptions and expectations about trading that ultimately were untrue. And I figured out that they were untrue. I figured out they were problematic and that they were holding me back. And I was able to kind of wipe the slate clean and rethink this whole trading thing. Okay. So I don't have the credentials that a lot of those other guys do that are on YouTube and have other programs. My credentials are the School of Hard Knocks, and I've been through it, and I've worked hard at it. And my advice to you is, if you think it's easy, quit. You need to quit now. Or if you think it should be easy, this job is as hard as any job you will ever do. Okay? It is as hard as any job you will ever do or have. Now it's up. I'm not going to say it's the best job for you or not as far as making a living. I'm not going to tell you that, oh, yeah, you should do this. It's hard. It's hard work. I work at it every day. All of our successful traders work at it every day. But we have a program that has proven successful for these people. And if you need to talk to some of them that to make a decision, that's fine. We're happy to give you names of people that have gone through our program, trade our system, been a VIP or a Einstein, and have been successful. And if you want to talk to some of them, that we're happy to give you the names. That we've had people volunteer to give us to send out their names to people that want more information. Yeah, the speed tick does work for Forex. I quit asking, Connor. I quit asking. I just, you're going to do what you're going to do. Any other questions? You guys have been awesome. Great group. I'm pleased to have such a good group for this particular event. No questions? All right. Well, send us an email if you have any questions later. You're ready to get started. Connor's standing by. He can help you get started. For those of you that are not particularly computer or NinjaTrader literate and you need help, you feel like, well, this is over my head. This is what we do every day. We'll come onto your computer remotely. We'll get you completely set up. Even if you don't have NinjaTrader yet, we'll help you set that up, set up the indicator, the charts. We'll set up your everything and help you get started. So we're in a business where we're here as much as we possibly can be to help you. Scroll up, Endurance. Scroll up just a little bit, and you'll see the one that intentional underscore one put in, which is Connor. And if you don't see that, he can put it in again. All right. Well, thanks everybody for coming. I hope you found this interesting and educational. Yes, Stuart, as a matter of fact, we started this week. 70%, or Bob, how many? Bob, are you still here? Bob is our guy. He's how many? You said like it's like 70-80% of our indicators are already bloodhound compliant. We've got a few more that we've got to get up to speed. So we've got a few more. We started on that this week. Should take us about 2 to 3 weeks after the first of the year, and then all of our indicators will be Bloodhound 8 compliant or Bloodhound for NinjaTrader 8 compliant. So we're on it. Bob's helping us out with that. Yeah, yeah. There were a few of them that we still need the programmer to work with Zach over there at Shark to make sure. There's a couple of things that are missing. For the most part, we're good. There's just a few things that aren't. I've been waiting until they kind of worked out the bugs with the new Bloodhound. Yeah, yeah, yeah. Well, I'm happy to hook you up. If you've got any questions, send us a support request. And if you don't mind, Bob, talking with Stuart about it, Bob knows the ins and outs of Bloodhound and of our indicators. So just send us a request and I can hook you guys up. I trust Bob. Not sure I trust you, Stuart, but I trust Bob. All right, everybody have a great rest of your day. Hopefully we'll see most of you on Saturday. And if not, hopefully we'll see you all real soon. All right, everybody have a great evening. Bye-bye.